Yes, it is. Good morning, everybody. On behalf of the board, I'm pleased to welcome you to the Sequoia Annual General Meeting for the financial year ended the 3rd of June 2023. Thank you for your attendance this morning, both those attending in person and those watching online. I am John Larsen, Chairman of Sequoia. Allow me to begin by introducing those present today. My fellow board members being Garry Crole, down there with the jacket on, Charles Sweeney beside me to my right, and Kevin Patterson to my left. Lizzie Tan, our CFO, was the front here, and Sally McDowell, the company secretary. Also in attendance are our auditors today, William Buck, represented by Ross Burt. I also welcome Louis Marina. Louis is outside, I think. Yes, representing the company's share registry direct. It's now past 10:30, and I'm advised that we have a quorum present. I now declare the meeting open. Procedural matters. I would like to describe the voting procedures that will apply to this meeting. In accordance with the ASX listing rules, I have determined that votes on each resolution will be taken by way of a poll. As advised in the notice of the annual general meeting, those attending online will not be able to vote or ask questions. Only Sequoia shareholders or their duly representatives or proxies are eligible to vote at this meeting. Shareholders and proxy holders would have received on registration a voting card that provides for the holding of a poll on resolutions put to the shareholders. You will need to complete these cards in order for your vote to be counted. If you wish to vote in favour of a resolution, please mark the for box. If you want to vote against the resolution, please mark the against box. If you wish to abstain from voting on the resolution, please mark the abstain box. If you are a proxy for a holder, you must comply with the direction of the shareholder if you wish to lodge a valid vote. If a shareholder or its proxy holder votes today in relation to a shareholding for which a proxy has already been lodged, the earlier proxy will be revoked in favour of the new vote. If you have any questions, please speak to a representative of the company or the share registry before lodging your completed poll card. During consideration of items of business of the meeting, you'll be given time to complete your poll voting card. The poll voting cards will be collected at the end of the meeting and counted by the share registry. The results of the poll will be notified to the ASX and published on the company's website following the meeting. As I put the resolutions at today's meeting to shareholders, I will offer shareholders the opportunity to ask questions. At this meeting, there will be 6 items of business, including 5 resolutions. There have been proxies received in respect of today's resolutions, which I intend to disclose when those resolutions are considered. As mentioned in the notice of meeting, it is intended that any undirected proxies given to the chair will be voted in favour of the relevant resolution. Before we move on to the formal business of today's meeting, I would first like to make some observations regarding the 2023 financial year and some remarks in relation to the company's outlook. A copy of my address and Garry's presentation have been lodged with the ASX and will be published in the investor section of the company's website. I welcome and thank my 3 fellow directors alongside me in Melbourne today for their continued commitment and support. I'd also like to thank our executive team led by CEO Garry Crole and CFO Lizzie Tan for everything they've done over the past 12 months and the efforts of our staff who are working hard to grow Sequoia, improve its service of offering and profitability. For those of you who are able to attend in person today, we all look forward to talking with you after today's formal meeting concludes. For those shareholders who are joining us online, we wish to thank you for attending the meeting virtually. Before we move on to the formal business of today's meeting, I would first like to make some observations regarding the 2023 financial year and some remarks in relation to the company's outlook. I'll then hand you over to Garry Crole, who will update you on the progress of our business in the current period. Throughout the 2023 financial year, the financial service industry faced numerous challenges, including escalating interest rates, continuing global inflation, a reduced number of available advisors, and a heavy fall in market volumes. Despite these hurdles, Sequoia adeptly managed to maintain profitability while observing increased operational expenses from an inflationary market, in addition to several significant abnormal costs. Sequoia reported revenue of 131.5 million and an EBITDA of 5.5 million, down from 12.4 million in 2022. The results were impacted by weaker equity market conditions and several abnormal non-recurring expenses. 2 acquisitions were completed. We made a small investment in Uri Asset Management and acquired the business assets of Castle Corporate and Castle Legal Proprietary Limited, post 30th of June 2023. Both investments are expected to be earnings accretive. In the second half of financial year 2023, we announced the divestment of 80% of Morrison securities to New Quantum. Sequoia received a total cash of 40.5 million and then maintained a 20% interest in Morrison's. This additional cash will allow the company to fund acquisitions with cash rather than via the dilutionary effect of issuing new shares, particularly as we feel that the share price undervalues the company and provides us with the confidence and capacity for a high dividend payout ratio of up to 90% net operating cash flow after tax. In September 2023, the board declared a special dividend of 4 cents per share post the completion of the Morrison's transaction. The company holds a cash balance of approximately $30 million, which, as mentioned, is to be used to finance future acquisitions. Any allocation of funds towards M&A will be approached with prudence. We continue to fund the share buyback as part of our capital management program, in particular while the share price is around current levels. In FY24, we are confident the business will deliver strong EBITDA growth and strong top-line growth. This was reconfirmed with the FY24 financial guidance we provided last week. Our confidence with such positive outlook is supported by the improved tailwinds for the first time in this sector of our industry for more than 5 years. Sequoia advisor numbers have grown at a time when the total industry advisor numbers fell by up to 40%. This headwind is one we feel confident will reverse, and note the overall reduction in advisors has abated in recent months, and coming into 2025, we expect to see an increase in overall advisor numbers and more inductees into the industry through the professional year programs and degree courses intended to replace an ageing advice industry. Looking ahead, we will centre our strategies on establishing economies of scale with the emphasis on technological advancements within our core businesses, in particular licensee services and the legal documents business, aiming to cultivate additional revenue streams and contribute to the overall improving margins. We find optimism in the government's efforts to adopt a number of member recommendations in the Quality Advice Review report. As our advocacy tongue-tied, revolves around streamlining the process associated with financial advice. Furthermore, we aim to lessen some of the financial burdens imposed on financial advisors by cutting unnecessary costs and simplifying regulatory procedures. I will now hand you over to Garry to provide a more detailed report on the group's activities for the past year, and I'll return for the formal business of the meeting afterwards. Over to you, Garry.
Thank you, John, and good morning to all of you and the shareholders online. I won't probably read word for word, but I'll cover it. John's mentioned some of the points I was looking to make already. Clearly, 2023 was a transition year for Sequoia. We set a business plan back in 2019, 2020, with an aim to capture 5% of the advisor market and look to get towards $300 million of revenue. And 2023 was a year where we just slowed our growth a fraction, but we're now confident that we're back on plan for that longer-term 5-year goal. John mentioned before that the environment was very challenging within our business. So, namely, consumers were faced with significantly increased cost of living due to higher interest rates, which meant that they're less likely to spend on financial planning and other types of things. So that does have an impact. The second thing is global inflation increased interest costs to small to medium enterprises, which slowed down the volume of market trading right across the globe, and in particular in Australia for our Morrison's business, our financial planners, our brokers, etc. So they were headwinds, and the increased cost of providing advice at a time when the regulator's making numerous changes to the way advice is distributed comes at a cost. So we invested heavily in more senior staff in our compliance areas. The cost of PI insurance went up, and other compliance-related costings do impact your profitability. But 2023, as John touched on, was a year where we might have taken half a step back so we can go 3 or 4 steps forward in the future, and that's what we're looking to do. And they did impact our results, as shareholders would have noticed. That the financial result that we tabled of around $5.5 million of EBITDA, opposed to sort of our longer term goal of $10 million of EBITDA, was a reaction to that. We did have some unexpected claims costs attributed to past businesses. So those claims were going back like 5 years ago that landed, and we've been fighting, and we continue to look to get some recovery of some of those claims. We've been talking about that for a very long time. It's been a difficult challenge, but we've made a senior appointment, as I touched on our recent presentations, of Justin Harding, who's a lawyer, and he's looking to work with our other legal counsel in respect to sort of recovery of some of those past claims and get some remediation recovery. We met with our PI insurer yesterday. That market has softened a fraction. So again, as John touched on before, the headwinds of the last 5 years, PI insurance premiums were going up 20 or 30% per annum. This year, for the first year in talking to the underwriter, that's just softening. So the market's beginning to recognise that our industry is sort of maturing, and some of the bad eggs of the past are leaving or have left, and the market's opening up. So the first time for a long time, there's more insurers entering that PI market, and that's positive for Sequoia and some other groups. So we're confident that that program should be positive for us in the future. The company's revenue of $131.5 million and $5.5 million of EBITDA was disappointing for sure for 2023, and that does include some discontinued operations such as Morrison's, which was a big contributor to revenue in particular, not so much EBITDA. It was around $1 million of the $5.5 million EBITDA. But the abnormal items, which could potentially be added, I think should be added back to create what we call normalised profit, included those $2 million remediation claims, unrealised losses on our share portfolio of $0.7 million, and lower revenue on our structured products over the last 2 or 3 years. We've talked about that for some time in our presentations over the last few years, that we walked away from being aggressively promoting structured products at a time when interest rates were going up and markets were uncertain. However, we now believe that whilst we still see some room for interest rates to go up, they're probably getting to a point where it's less likely that they're going to go up in the same multiples that they have in the past. So it gives us greater confidence to begin to market protected lending products to consumers. So if you add that back, we're sort of looking at a $9 million EBITDA result for 2023 as normal, and we're looking to pay out less tax, the 90% of operating earnings after tax as our distribution. So that's where the 4 cents has come from, theoretically. Some of that was abnormal, some of that was because of and we had to treat it as a special because we didn't have an NPAT in this year's accounts as a result of Morrison's numbers coming in 24, but we wanted to pay out what we call normalised profit this year, and that's where the 4 cents dividends come from. In the second half in 2023, obviously we made that divestment of Morrison's for $40.5 million, and that's a business that we acquired approximately 5 years ago for obviously much less than that. We improved that business, and then we looked to we were never looking to really sell that business, but we've stated what I call fair value of each asset on our balance sheet, and someone come along to us and was looking to pay more than what we believed was fair value at the time. So I never like to sell my children, but it was important to me to look after shareholders first and take the offer we had on the table for that business. And it's really placed us in a terrific position from our balance sheet perspective. So after the cost of that and making some acquisitions recently, we're left with in excess of $30 million cash, and we'll be deploying that very modestly. So there's been some concern that I might be the boy in the lolly shop and spend it. We're not looking to do that. We're looking to be conservative and buy businesses on 4 times earnings moving forward. And the 90% payout ratio that we've talked about. So over the last 4 or 5 years, I've been talking about going from 25% to 35% to 40% to 50% as our payout ratio over time as we matured. That sale has allowed us to move straight to a 90% payout ratio of operating cash after tax. The $30 million cash, we believe, is a big enough buffer for our acquisition strategy, and therefore we can pay out the balance of our earnings directly to shareholders in the form of fully franked dividends. So we believe we're a growth play and a yield play, and I think that's very important. We have made 2 acquisitions in this period, as John touched on as well. The investment in Uri Asset Management was investing in a fund of funds approach where financial planners who don't necessarily want to create their own model portfolio can choose a fund manager that's basically creating a model portfolio in its own right. And that launched approximately 8 weeks ago and has got over $30 million of funds under management in that 8-week period. So we're seeing very strong inflow into that business, which is terrific. And the Castle Corporate and the Castle Legal businesses come into our professional services unit. The team in the professional services division, basically, I've got a fly flying around me, everyone, on TV, so that's pretty fun. That team has spent a lot of shareholders' capital in building what we believe is the most robust online software as a service document business in the country. And the Castle Corporate was more of a manual type business. So already, as Panther Corp did when we acquired that business, the Castle Corporate business is beginning to integrate into our online system and our online delivery, which is very positive, and we expect that to be a very accretive earnings investment. We are looking to continue our market buyback. So one of the things that I've been stating to the market on a regular basis is that we're very keen to buy businesses at 4 to 5 times cash flow earnings. Sequoia is trading at 4 to 5 times cash flow earnings at an enterprise value point of view. So the board's belief is, whilst the stock is weak, at periods where the stock weakens, sort of most recently we've been buying back at around 50 cents per share. We're quite aggressive in that market. We've bought more than 5 million shares back already. So we've used our earnings to basically acquire ourselves. The number of shares is now down to 134 million from what was nearly 140 million shares on issue. So that should be very earnings positive at a multiple for investors as well. We recently published guidance that stated we expect to make a minimum of $10 million normalised EBITDA for full year 24. We stick to that number. We're very confident. The earnings history of Sequoia is that 40% of our earnings come in the first half, 60% in the second half. We expect that to be quite similar again this year. The businesses themselves, we expect to generate $12 million of EBITDA with around $2 million of head office and other costs, therefore landing at your $10 million. If we do that $10 million of EBITDA, pay your tax, I would expect our dividend to increase. The board hasn't made any decisions on the distribution of dividend in each half, but I would expect that it would be something like 90% of operating profit after tax in the first half based on the first half result, and the same in the second half. So that's what I would expect the board will do now we're making these types of statements. If you back out the Morrisons revenue, we're at around $110 million. We expect to grow revenue by 25% from our organic business and those 2 small acquisitions that have come in this year. So we're looking at around $130 to $135 million of revenue for full year 24. We're tracking at that rate, which is very positive when you consider the first half is weaker than the second half, and the EBITDA number is tracking at that 40-60% ratio that I expect. So if you look back at 2023 results for corresponding periods, we're well ahead. So we're feeling very comfortable about that. In 2023, I talked about it that we invested in people, and during the year announced 3 senior appointments. So we appointed a chief operating officer, which something that myself and the board have needed for quite some time. And Martin Morris has joined us and is in the room today. Martin's got a terrific background in our industry in many of the areas of our business that we operate in. So it's in sales distribution. He's a qualified sales coach. He's also he worked at a dealer group. So he worked with one of our competitors in the market that's, as a large scale licensee. He's worked in self-managed super fund administration, and he's worked in sales at one of the major platforms. So from our point of view, we couldn't have got anyone better, and it's working out very well. We've introduced some 90-day plans within each business unit, and we're looking to reduce the silo type approach that we might have suffered from in the past to sort of make Sequoia one company strategy, and that's coming in. Justin Harding has joined us from Synchron as head of legal and risk. He's a qualified lawyer, and he's helping us with some of those remediation programs, and already that's having an impact. He met with me with the PI insurer yesterday, and that was reviewed as positive. And Mark Hutchinson also joined us from ASX as another senior compliance manager, and since then we've had some more as well. So we're really strengthening the support services, and that's probably the reason why more advisors in the industry are coming to Sequoia and leaving other licensees, and why we're the number one growth licensee in the country this financial calendar year. We expect earnings in all divisions to be positive, and that headwinds that I talked about, I think, is part of the reasons why I'm rather confident. The number of advisors have stopped dropping. The number of advisors doing professional years has begun to commence increasing. The regulator is beginning to recognise the need for less compliance and less red tape in the delivery of financial services. The reduction in the number of advisors is meaning more of our advisors are very busy. The ageing population of advisors has caused there not to be enough advisors, and those advisors that we have, and those numbers are increasing, are all very busy, and they're all seeing revenue increases of between 10 and 20% right across the board of the sort of 400 advisors that we do have. We are looking at other acquisitions. In particular, we're looking at further document businesses in the professional services area, further legal businesses in that particular area, small licensees that are looking to hand up their license and their advisors to come into our group, customer books, SMS of administration roll-ups, but all of the time we're looking to buy those on 4 to 5 times cash earnings pre-synergy. So we're not looking to buy some businesses and hope we get synergies and then that be the 4 to 5 times earnings. They've got to be profitable in their own right before they come to us, and then the synergies that we create by our scale improves them. That's my take. I won't go through the slideshows, hopefully, because we don't have it here. You can read those online. But as I said, I'm confident. I'd really like to thank the staff for their commitment to the group. We have a terrific team. Many of them have been with us for a very long time, and Lizzie Tan and Flo Allard and all of the teams and all of the leaders have done a great job. And I'd like to thank those as your CEO and give you confidence as shareholders that we're confident. And we believe this industry is really well placed for the first time for 15 years. I think we're getting a bit of a tailwind instead of a headwind, which is really exciting. Thanks, John.
Okay, thanks, Garry. Thank you for that. Sally, do you have any questions that have been received prior to today's meeting?
No, John.
Okay. Thanks, Sally. Are there any questions from shareholders attending today regarding either my address or Garry's address? There are no questions I see, so I think we'll just go across to the formal business of the meeting, which only items in the business that come before the meeting today will be specified in the notice of meeting. Only questions relating to a particular business item will be taken during this time. The first item of business of the meeting is consideration of the audited financial statements and related reports for the year ended 3rd of June 2023. The Corporations Act requires the audited financial statements and related reports for the 2023 financial year to be considered at the meeting. Although shareholders are not required to formally vote on the company's financial and related reports, I welcome any discussion or questions on the reports. As I mentioned previously, the company's auditors are William Buck, and Ross Burt is present at the meeting and is willing to and able to answer any questions on the audit or the content of the auditor's report. Any questions? You haven't seen no questions? Okay, I've been advised there've been no questions put forward, so are there any, so I think we'll just move. There's nothing else to be done there, so I asked the company secretary to record the financial report for the company and its controlled entities for the year of 3rd of June 2023, together with the director's report and the auditor's report, have been received and considered by shareholders. Resolution 1, the next item of business, is a non-binding resolution to adopt Sequoia's remuneration report, which is set out in the company's 2023 annual report. The vote on this resolution is advisory only and does not bind the directors. However, the board will take into account any discussion on this resolution and the outcome of the vote when considering the future remuneration policies and practices of the company. There have been proxy votes received in relation to this resolution. These are 36,601,403,000 for, 302,570 against, and 1,025 open. 0 votes have been abstained. There's 16,192,702 votes were excluded. Any questions regarding this resolution? As mentioned, the next item of business, Resolution 2, relates to the re-election. I formally put this resolution to the meeting and ask for you to complete your poll voting card for Resolution 1. Done. As mentioned in the next item of business, Resolution 2 relates to the re-election of Kevin Patterson as a director. Kevin's qualification, background and experience are summarised in the notice of meeting. There have been proxy votes received in relation to this resolution. They are 47,861,899 for. You've got 11,000 against. 2,156,566 open. 808,199 votes have abstained. No votes were excluded. Are there any questions in regarding to this resolution? I formally put this resolution to the meeting and ask that you complete your poll voting card for Resolution 2. Resolution 3, an increase in the non-executive director fee pool. There have been proxy votes received in relation to this resolution. These are 36,080,221 for, 814,459 against, 1,025 open, 9,293 votes have abstained, and 16,192,702 votes were excluded. Are there any questions regarding this resolution? I formally put this resolution to the meeting and ask that you complete your poll voting card for Resolution 3. We'll go ahead with that or drop this one. Resolution 4, we will withdraw. Resolution 5 relates to the amendments of the Constitution of the company. There have been proxy votes received in relation to this resolution. These are 48,668,098 for, 11,000 against, 2,156,566 open, 2,000 votes have abstained, no votes were excluded. Are there any questions regarding this resolution? I formally put this resolution to the meeting and ask you to complete your poll voting card for Resolution 5. Before we move to the poll procedure, are there any further questions? Please note, this is your last opportunity to ask any questions.
I think we should have some questions. Any questions, Paul? The remediation of the claims. What are the realistic chances of the underwriters changing their position on that?
I think the realistic chances that are low to medium, but we are looking to recover from the advisor and their owner directly under our agreement where they provided us director guarantees.
Do they have the wherewithal?
We don't know. They're a continuing business.
No more questions? From you, Garry? I now appoint and request Louis Marina, representative of the company's registry direct, who has examined and prepared summaries of the proxy forms received to act as returning officer and conduct the poll. Once you have completed your poll voting card, please place your card in the poll box, which will be brought around by a staff of Registry Direct, which will be Louis, I think. If you have any questions, please speak to a representative of the company or the share registry before lodging your completed poll card. It appears now everyone has voted and the process has been completed. I therefore declare the poll closed. The results of the poll will be notified to the ASX following the meeting. As this concludes the business of the meeting, I thank members for their attendance and now declare the meeting closed. And now help yourselves to any food and drinks that are available. Thank you for attending.